we have the management now, Vinod Kumar Gupta, CEO at Punjab Chemicals and Crop Protection, joining in with us this afternoon to talk about the company. What one should be expecting from the company in terms of the revenue growth that they have going forward as well. Thank you so much, Mr. Gupta, for joining in with us this afternoon on ET Now. And I want to start about your strong performance that you've seen. When you look at it, FY23 also, you have managed to cross that 1,000 crore revenue mark. Even in Q1, when you look at it, you have seen a good growth of around, when you look at it, it's 281 crores of revenue that you've seen coming in. For the year, how are you expecting in terms of the performance that you've seen? Do you see this performance continue for the rest of the year? What is it that you're expecting in terms of the demand trends that we're seeing, especially in terms of the global inventory destocking also that one has seen?
Good afternoon and thank you for having me here. Overall, I think our Q1 was very good, mainly because we had focused on having a nice product mix and aggressive efforts on cost optimization. Going forward, I think as industry is seeing, there is a pressure on the inventory destocking that is happening across the globe. And we also see some impact of that in the business in the current quarter and forthcoming quarters. But overall, based on our current assessment, we will see a growth during the year. Our original projection was double-digit growth, but that may not happen. But still, we are still quite optimistic and we are working towards achieving growth in this year.
So, as I see that first quarter, you've done an EBITDA of almost 35 crore. So, for the full year ending, would you be moving closer to 130, 140 crore or somewhere between 120 to 130 crore? Where do you see EBITDA numbers actually landing?
I think we have been consistently improving our EBITDA margin and several initiatives are under place to improve our EBITDA margin, especially in current tough market condition. We are trying to sustain the EBITDA margins. So we will continue to be in the same percentage range as we have right now. Say around 13 to 14% is what we are targeting for this year. However, as we are working on our new product pipeline, in future, this EBITDA margin will improve as we start commercializing the products on which we are working.
If I take a slightly longer term view, say FY25 ending, what kind of top line number are you targeting with what kind of margins?
So I think this year probably is going to be an aberration as it is in the industry. But we have been consistently looking at growing our top line by about 15 to 20% year on year. If you look at last three years history, we have grown very aggressively. And going forward, we have put plans in place where we will see a growth of 15 to 20% year on year. So if you look at the number of say 1,000 plus crores this year, maybe in FY25 we will be at 1,200 plus crores going forward.
1,200 crore with a 13% kind of a EBITDA will land you closer to 150 crore in absolute terms as far as your EBITDA goes.
That's right.
What are the what's the strategic direction you're taking in terms of capacities, in terms of acquiring land beyond the FY25, 3 to 5 year picture? What direction are you taking the company in?
So broadly, see, we have increased our focus on R&D and we have built a very strong product pipeline, which is, our core is the crop protection business. But we have also developed a strong product pipeline on intermediates and specialty chemicals. Going forward, we are actually looking at acquiring a new plot, which we are targeting to acquire in next 2 to 3 quarters. And then from there on, we will be having a capex pipeline to make sure that whatever products we are working upon, we are able to commercialize.
Right. Mr. Gupta, one more thing you spoke about is those new product pipeline, and you have a very strong product pipeline when you look at it also of around 15 products as of now as well. But when, do you expect the commercialization and incremental revenue actually coming in from this? And by how much would that margin profile actually improve by this?
So, these products will get commercialized in phased manner. So, I mean, some products are getting commercialized in next 1 or 2 quarters. Some will get commercialized. There will be a gestation period of about 12 to 15 months. So overall, we see that in next 3 years, we will be able to utilize full potential of these products that we have developed and we are working with our customers. So with that, I think as I indicated earlier, our growth will be 15 to 20% year on year. And our EBITDA margin also we are looking at improving by at least 3 to 4%. with the addition of these new products.
Although, I just want to understand one thing is that, when you look at it, UPL, that is one of your big customers, and they have lowered their guidance. And they are also expecting a recovery in the second half of the year. So, any volume contraction that you could be expecting to see in the near term at least?
Well, I think as UPL has guided that in the second half of the year, the market is looking better because what the data point from the market is saying is showing that the consumption in the end market is happening. There is no decrease or reduction in the consumption in the end market. So inventory liquidation is happening, and that's why we also expect that in second half of the year we will be able to gain further momentum in the volumes pickup. Prices will remain volatile in the meantime, mainly because of the pressure on the volumes and capacity utilization by various players. But overall, we see that in second half, recovery of the volumes will take place.
And just lastly, I want to understand in terms of any new geographies you're looking to expand, which regions are you looking and targeting over there, if any?
Currently, Punjab Chemicals, we are focused mainly on Europe. Our product profile is mainly for Europe, for Japan and India market. Going forward, we are actually expanding into America, that is US and Latin America both. In Latin America, last year we made a foray and we made some good progress. We are also talking about fresh registration in both these markets, and these will be our focus area going forward. Obviously, our existing markets, Europe and Japan, that's where also we have some products where we will commercialize. But our new products, new geographies are mainly Americas.
Right, sir. Thank you so much for giving us an understanding of what we should be expecting from the company in the long term as well as the short term as well. Thank you so much, Mr. Gupta, for joining in with us this afternoon.
Thanks a lot. Thanks.